let's start with your bullish example trade on NVIDIA. It's at 178 today. Good morning, Tom.
Yeah, good morning, Nicole. Pulling back from those all-time highs that we saw earlier this week. It still had a great run so far this year. Now, you got to keep in mind that they report earnings on the 27th, right? So that's going to be maybe a potential catalyst. But if you think this stock, this pullback might give you that opportunity to get in if you've been waiting for it to kind of pull back, because there haven't been too many pullbacks since those April lows. So I looked at a strategy that implied volatility levels relatively low, even though we've got earnings event coming up, and that's because of the parabolic move that we've seen in the overall market and NVIDIA. So I looked at a strategy that's not a pure earnings play. It gives myself a little bit of duration, about 5 weeks in this position. I went out to the September monthly options, so 35 days to expiration on this one. We're going to buy that slightly out of the money 180 strike call in September, and then against it, to offset some of the cost and risk on this position, we're going to sell the 195 strike call. So bullish, $15 wide call vertical. You're going to pay roughly, I've got 620 debit on there. That's where it was trading earlier. It's probably trading closer to 5.5 right now. So you can get it a little bit cheaper here. But if you pay that 620 debit, it takes your break even to 186.20 over the next basically 5 weeks here. That's only about 3.5% above the current share price in NVIDIA. So you don't need that massive move to the upside just to grind higher. And that 195 strike, that's still only about 8.5% above the current share price. So expectations going into the earnings report are expecting a bigger move than that also. So you've got duration on this one, low volatility environment, risking about 620 to make a potential 880 on this. But like I said, you can probably get it cheaper right now, around $5.5 debit for this. But you definitely need to move to the upside on this one over the next month. And, you know, even if you don't get that move on earnings, you still have duration on this particular trade.
Understood. How about a more neutral type of example trade, Tom? How would you go about that, please?
Well, like I said, Nicole, a lot of people feel like maybe they've missed this if they're not involved in NVIDIA. So I looked at another strategy, and I went out to the August 29th weekly cycle. So this is the earnings week. So implied volatility levels in that option series are really elevated because of that event risk of earnings. So I looked at a cash secured put, and this allows you to collect a pretty hefty option premium, or if the stock does continue to fall below the strike that you sell, you might be able to buy the shares at a discount to where it's currently trading. So going out to the August 29th weekly cycle, I looked at selling the 170 strike put. Naked short put, cash secured put is what we call this. You're collecting roughly, I've got a $3 credit on there. It's trading closer to $4 right now because the stock has moved lower this morning. But the credit that you collect is what you can make on this trade. So if you collect the $3 credit, you can make $300. If you collect $4 credit, you can make $400. But if you collect that $3 credit, it takes your break even all the way down to 167 over the next 14 days. So if the stock does fall below 170 into expiration, you get assigned on those puts, you're buying, in essence, buying the shares at $167. That's about 7% below the current share price in there. So this is one of those twofold type of trades. You either just want to keep that credit that you collect on it if the stock stays above 170, or you're willing to buy the shares if it falls below 170 and you're still short the put, that you're going to get to buy those shares at a steep 7% discount to where it's currently trading today.
As a long-term buy and hold investor, I have dozens of growth stocks in my portfolio. NVIDIA would be my choice if I could only choose one stock. The business trades at an appealing valuation and fulfills many of the requirements for a profitable investment. The elephant in the room needs to be addressed. I would never purchase and hold a single share of stock, and to be honest, I find the idea ridiculous. Dozens of stocks make up my portfolio because they offer me the stability and diversification I need to sleep at night. My entire portfolio only loses 1% to 2%, even if one of my biggest positions drops 30% or 40%, and they have. I can't think of a situation in which I would only invest in one stock, and I advise assembling a portfolio of at least 15 to 20 stocks. However, just for the sake of thought, if I were to own just one stock, it would need to fulfill specific requirements. A business that leads its industry, has a sizable addressable market, and has a proven track record of success is what I would like. I would like to buy a business that has a track record of financial success, is driven by innovation, and has significant secular tailwinds. NVIDIA would be my first choice if I could only purchase and own one stock. NVIDIA obviously has a lot to offer and fulfills all the requirements. Since its graphics processing units, GPUs, are the preferred option for both casual and die-hard gamers, the firm has long held a dominant position in the video game industry. According to data gathered by John Petty Research, NVIDIA holds a 92% market share and is the clear industry leader in the discrete desktop GPU arena. Since its GPUs are similarly skilled at transporting data over the internet at breakneck speeds, NVIDIA was also able to benefit from the emergence of artificial intelligence, AI. According to IoT Analytics, the company also holds a commanding 92% of the market in the data center GPU area, which is where the majority of AI processing occurs. Over the past few years, NVIDIA's performance has been fueled by AI, but this wasn't just happenstance. By concentrating the company's research and development efforts on artificial intelligence, AI, in 2013, CEO Jensen Huang recognized the writing on the wall and set up NVIDIA for future success. This innovative mindset has helped the business stay far ahead of potential competitors. To keep its competitive edge, NVIDIA invested $13 billion on research and development, R&D, in its fiscal 2025, which ended on January 26. This amounts to about 10% of its total revenue. The business is still investigating new possibilities in fields including robotics, automation, agentic AI, quantum computing, self-driving automobiles, and more. It's simple to understand why NVIDIA is making significant investments as it looks to the future. There is disagreement despite the enormous potential that AI alone offers. According to McKinsey & Company, a worldwide management consulting organization, generative AI has the potential to boost the world economy by between $2.6 trillion and $4.4 trillion over the next 10 years. With an estimated $15.7 trillion between now and 2030, the Big Four accounting company PwC has a far larger projection. This makes it easier to see how big of an opportunity NVIDIA is aiming for. The figures are convincing. It's hard to overestimate the extent of NVIDIA's success, as the company has already begun to benefit from the AI revolution. Context is aided by the outcomes of the previous 2 fiscal years. NVIDIA's record sales of $60.9 billion increased by 126% in fiscal 2024, which ended on January 28, 2024, and its adjusted profits per share, EPS, of $12.96 increased by 288%. NVIDIA's record revenue of $130.5 billion in fiscal 2025, which concluded on January 26, 2025, increased by 114%, while adjusted EPS of $2.99 increased by 130%. NVIDIA's $44 billion in revenue in the first quarter of 2026 increased 69% year-over-year and 12% quarter-over-quarter. After deducting a one-time expense associated with its chip sales to China, earnings per share increased 62% to $0.96. Even if that is noteworthy on its own, triple-digit comps make it even more outstanding. The management thinks the business will keep growing. NVIDIA is projecting $45 billion in revenue for the second quarter, which represents a roughly 50% increase. However, the actual results will probably be greater because the corporation has a history of providing conservative forecasts. Due to its track record of financial success, NVIDIA's stock price has soared 1,130% since the beginning of 2023, making it the first $4 trillion corporation in the world by market capitalization. The corporation has a considerably longer history, even though its recent performance has been nothing short of spectacular. NVIDIA's stock has increased by over 30,000% in the last 10 years due to the company's continuously impressive financial and operational outcomes. The issue of NVIDIA's value is another. The stock is selling for about 30 times next year's profits, which is an attractive multiple considering the size of the potential, notwithstanding the company's development trajectory and track record of performance. When combined, NVIDIA's leadership in the sector, innovative history, forward-thinking CEO, and sizable and expanding market potential make up a strong case for stock ownership. It's simple to understand why, if I could own only one stock, I would choose NVIDIA given its impressive financial record and fair value. Regarding NVIDIA and AMD, 2 of the leading brands in AI technology, Mizuho is sounding even more optimistic. Prominent analyst Vijay Rakesh maintained his outperform ratings but raised his price targets to $205, citing a confluence of high hyperscaler spending and demand for AI servers. That represents about 13% potential growth for NVIDIA. Rakesh observes that Taiwanese server manufacturers, such as Wistron and Wiwin, are seeing robust sales, and anticipation for the GB200 and GB300 GPUs is growing. Another 300,000 to 500,000 units annually could be added in FY26, thanks to the additional GPU licenses from China, which could be a significant growth accelerator. According to his long-term projections, revenue will increase from $208 billion in FY26 to $292 billion in FY28. With the MI355 launch and the MI308 ramps in China, AMD's Instinct GPU sales are predicted to increase from $8.57 billion in FY25 to $13.6 billion by FY27, representing an 11% upside. Additionally, Rakesh raised his forecast for the September quarter to $8.8 billion in sales and $1.15 EPS. Both chipmakers are still benefiting from the AI boom, and the upcoming years may be even more exciting given China's approval of new GPUs. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video. In Friday's trade, NVIDIA saw a decline. Donald Trump is threatening to impose 300% taxes on semiconductor imports, and large funds are purchasing the stock. At $179.07, the chip stock was down 1.6%. On Thursday, they increased by 0.2%. After breaching above $180 for the first time this month, NVIDIA appears to be mainly range-bound ahead of its earnings on August 27th. The president's announcement that he will decide tariff rates on steel and chips within the next 2 weeks, and that taxes on some commodities, including chips, might increase by as much as 300%, caused a widespread downturn in the chip industry on Friday. Trump stated that he would probably not impose tariffs on businesses who have committed to producing their goods domestically. The $500 billion Stargate project, which intends to construct new artificial intelligence data centers in the United States, has NVIDIA as a technological partner. The Taiwanese government also plans to exclude its main supplier, TSMC, from chip taxes. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
The close. Kevin, what are you keeping an eye on specifically this afternoon?
Yeah, I mean, this is one of those days, once again, we've seen this over the last couple of trading sessions where the selling pressure, pretty much for the majority of the day, has been fairly aggressive, and any pop that we've had has been actually sold into pretty aggressively here, and that's exactly what we are seeing today. If we kind of go to those morning levels that we talked about early on in Morning Trade Live here, this 64.40 level has been a key area of support. We came down to that level once again today, tested it, and we did see some buyers kind of stepping in, but unlike yesterday, we are seeing a little bit more of a failure on an intraday basis, kind of moving back to the downside. So going into the close, I'm actually looking at the 64.50 level. It looks like there might be some pen risk there. Just the amount of volume that has been traded at those levels, as well as kind of this price action in the E-mini S&P futures, kind of signifies that we have seen some dealers really trying to kind of push us down. And it's not only just the dealers, right? It's other factors that are kind of taking place. You talked about the weakness when it comes to NVIDIA. That has been a stock that obviously has been dragging down the market, at least for now. So 64.50 to the downside, and then to the upside 64.70. The key area for us to be able to break higher in order for us to kind of get a squeeze on this options expiration Friday here is 64.65. We actually did see that as an area of resistance about an hour ago or so, but it was unable to resolve itself to the upside. We did see a little bit more of a failure to the downside here. So overall, once again, it's still it's an inside day. We're still in a consolidation range, but it's not really the price action that you would like to see, especially given the fact that we did start off so strong.
Yeah, and we are still on track for a weekly gain here, Kevin. So is what we're seeing just some investors taking their gains off the table?
Yeah, it could be the fact. I mean, obviously there could be also some, geopolitical risk events over the weekend. So maybe trying to reduce risk as much as you possibly can, based on what's going to be happening effectively right now between President Trump and Vladimir Putin is going to be a very key area. But we are seeing a little bit of exhaustion. And in fact, I mean, if you kind of look at NVIDIA over the last couple of trading sessions does appear that it's trying to either consolidate, or we are maybe potentially gearing up for a substantial pullback within that name here. The volume has been, for the most part, light, not only on the on the up days, but also on the down days. So you need another catalyst, you need another theme in order to hit this market and try to break us higher here. I'm not discouraged. We're still trading at all-time highs, but the consolidation is really not ideal. And in fact, if we look at the E-mini S&P 500 futures, we talked about this when I was in the office last week, Marley, where we had this kind of wedge pattern that's taking place, making higher highs as well as higher lows. But if you kind of look at it, we're pretty much at the apex of this wedge pattern, this triangle, whatever you really want to call it here. And so you are looking for a resolution. If you are a believer of technical analysis, you're looking for a resolution either to the upside or downside, at least by Monday or Tuesday of next week, because the range is getting pretty big, pretty small. And actually, if we close at these levels, technically we would have broken the support line on that wedge as well, which is not something that you really want to see. Also, potentially with a little bit of a bearish divergence on that RSI.
So with that wedge being so narrow there, Kevin, that's signaling to you that the resolution may be in a bearish direction?
We don't know what the resolution is going to be. I mean, at the end of the day, we're still near all-time highs. But when you come to an apex, you basically are looking for a move in some direction, a substantial one, either a breakout or a breakdown in the market. Today, obviously, you don't want to see this kind of candle structure taking place and us closing at this level, because technically it has broken that lower support level. And if you look at yesterday, you can make the case that we may have had a little bit of a doji candle or indecision candle at the top of a trend, especially making new all-time highs. That's not really something that you want to see. It's not the most bullish candle that is out there either. And then also looking at that RSI, where we are making lower highs and effectively lower lows, but price action continues to move to the upside. That's a bearish divergence. The big thing that is actually bullish is this MACD cross at the bottom here. We're trying to see a MACD cross of the 12 EMA above the 26 EMA. That is bullish, but you're looking for some form of a resolution. Hopefully it's to the upside. Any type of formal breakdown, you're really looking at an area of support for the E-mini S&P futures sitting at around 62, let's say 62.60 or so is your first major area of support, which would be a pretty decent drawdown from here.
And what else are you looking at as we get closer to the close here today?
Yeah, just looking at the advancing minus declining stocks and the S&P 500. Look at this comp chart anytime we have any type of situation where the sellers are fairly aggressive, especially when you're looking at the E-mini S&P 500 futures, and looking to see where if buyers are really trying to step in going into the close. This is options expiration Friday, so you do expect a little bit of fireworks going into the close, hopefully. I mean, the price action really kind of signifies that we have some pen risk here at around 64.50. But if you are able to see some buyers really stepping in and you see this broad-based move to the upside, or that white line moving to the upside, that could give you enough confidence or enough catalyst for the S&P 500 to try to resolve itself a little bit higher and at least try to get yourself to that 64, 65-ish area. That would be ideal. You don't really want to see a breakdown going into the close on a Friday, given that technical setup that we just talked about for the S&P futures.